How to enter an episodic pivot? Once you determine that this particular stock has a good catalyst, then it becomes important how you design your entry into that particular opportunity so that you can get in with the lowest possible stop. Many episodic pivot kind of a candidate are going to be gapping up. Not all of them gap up, so in fact the best ones are the ones which don't gap up much, because then it gives you the best opportunity. Those are the ones which are not typically on everybody's radar. They are not very popular kind of a thing, but a lot of time these stocks gap up. So your entry is going to determine what is going to be your stop. It is going to determine what kind of a sizing you can do. It is also going to determine what is your profitability, because if you get a good entry, then on a first day itself you make so much profit that the trade is likely to be always profitable unless it's gapped down after that. So in order to do this, there are multiple strategies which you can look at. Only one approach to entering is not necessarily the best approach. One of the ways in which you can enter episodic pivot is by what is called as a OPG order, or a opening price guarantee order. It is also called as a market on open order. In this particular kind of order, what happens is you put the order before the market opens. You have to put this order before 9:28, and you cannot change the order after 9:28. So this is an order where you have to specify that this order needs to be executed at the open, and many brokers offer this kind of an order. In fact, almost all the brokers offer this kind of an order. And in this particular kind of an order, when you specify that this is a market on open order or market order OPG, which is opening price guarantee order. So what happens in that case is your order is already in the market, and as soon as the stock opens, you are guaranteed the price at which the stock opens. Now the problem with OPG orders can be that once you get filled in, the stock can drop down, because many of these stocks which have a catalyst, while there are buyers who are attracted to it, there are also sellers who are attracted because they already have a position in this stock, or they bought it in anticipation of good earnings, and when it goes up they sell, or there is selling for multiple reasons. There is a selling at the open. It can be the fund selling. So as a result of this, you can get a shakeout basically. So OPG order is one of the orders which I use rarely when I have a very high conviction trade, where I have looked at the episodic pivot and I am very convinced that this is going to go up 100, 200, 300% and I need to get in. So in that particular case, I would definitely use an OPG order. And this OPG kind of an order works better if you have a smaller gap or no gap kind of a situation, which tends to happen in stocks which are not necessarily on everybody's radar. There are like stocks which are on everybody's radar, like yesterday Carvana was on everybody's radar, and that's why entering some of the things which are very popular is not the best strategy. Now opening range OPG is one of the ways in which you can enter, but because there are these drops which happen after the open many times and which can shake you out, and then the stock rallies back, one of the techniques which I use is delay the entry by a minute or a minute and a half, because most of the time the checkout happens very quickly. It happens in the first 30 seconds or 60, 50 seconds, and the stock starts recovering. So as soon as the market opens and I see that it goes down a little bit and it starts recovering is when I put in my order. I'm not necessarily going on the lower time frame to look for this, but I just allow it a gap or a time lag of little bit. I'll show you this on an entry on this particular stock, TMDX. Now if you see TMDX at earnings, right, and what factors go into determining whether there is going to be a OPG or a delayed entry kind of a thing is also I look at the past reactions to earnings. So here in this past earnings, where the earnings was still good, you had a checkout. So that was something which was working on my mind. Here this was the earnings, and this is how the stock had behaved on that earnings. And previously also, if you see earnings, there were shakeouts in this particular stock. So I was expecting there will be some sort of a shakeout in this particular stock. So I waited for the shakeout to play itself out. As soon as the shakeout was played out and the stock started recovering is when I got an entry into this. Now similarly, yesterday there was a stock which I entered, and I entered after the shakeout, basically here Aspen. Now Aspen, again, you have to always, like, whenever I am looking at basically Aspen is another stock which had a EP yesterday, and whenever I'm looking at like an EP, I always go back and look at last 2, 3, 4 earnings and see how it did it during these earnings. So if you see Aspen, right, and Aspen earnings, there was a little bit of a shakeout. Here there was like not much of a shakeout, or there was no shakeout at all. And you go back and keep looking at it to see how it behaves on the opening print, and as a result of that, I also like entered this. In the first 1 minute I entered, but after the checkout was complete. So this is a delayed kind of an entry where you are going and doing basically an entry, not immediately, not using OPG as a strategy, but still you're trying to like in most of these entries I still try and do it in the first 1 minute, like ATM DX entry was also in the first 1 minute, SBN was still in the first 1 minute. Now there is another way in which you can enter an episodic pivot, and that is by going into a lower time frame. Now you can go into a 1 second, 5 second, whatever chart, or 1 minute, 5 minute chart, and enter based on that kind of a chart, and which is a very popular method which is being used by many Stockbee members. But they are not necessarily looking at trading EP as a multi-day swing. They are looking at trading EP as a day trade. So in their case, they are primarily day traders. Because they are primarily day traders, they are used to doing these things on a lower time frame. So they go on a lower time frame and they will buy on a shakeout, or they will buy on an opening range breakout. They will buy on like basically some sort of a exhaustion if there is a selling which comes in. But intraday entry is another technique which you can use. The other technique which I used to use earlier, but which I no more use, is to enter in the pre-market as soon as the earnings come in. Now this is a very effective technique for larger stocks. Like yesterday, I was watching Apple, and as soon as the earning came in, there were a bunch of people who entered it, and those who entered it, they are in a better position because their entry is very good. Somebody who's trying to enter today on a gap is going to get a poor entry, and most of the time the profit is realized by these people who enter early on the same day on some of these larger stocks. But that kind of a after hours entry works best on stocks which are very liquid, and they are not necessarily EP kind of candidates, because for me EP is something which should be capable of making 50% plus move. But in the common parlance, because EP as a strategy has become more popular on Twitter and everywhere in the trading thing, traders call any earnings breakout as an EP. While I have a stringent criteria in this entire earnings season, I just had 2 stocks meeting my criteria, and both of them I entered. But when I see on Twitter, or when I see in the other Discord groups and things like that, people find 5 EPs in a day or 10 EPs in a day. So their criteria for defining EPs is really very broad. They're looking for any earnings gap as an EP. So as a result of that, the early entry becomes much critical for them, because in their case, they're trying to enter in pre-market, because many of these people truly are trading these things as a day trade, or trading this as a 1 day kind of a phenomena. Now, in order to get a pre-market entry, you need to know which stocks are coming out with earnings, and this is only possible on larger stocks, because these unknown smaller stocks earnings are not necessarily so followed. But can you enter it in pre-market? Yes. If you're going to be entering it in pre-market, again you have to look at whether it is fading or not fading, whether it is like attracting buyers, and the speed at which you have to enter in pre-market is something which is a skill. I think beginner traders will be having a lot of problem trying to do it. Most of the people who do this in pre-market, they are skilled traders, they are skilled day traders, they do this for a living day in and day out, and they have the platforms which allows them to get into pre-market quickly and get out quickly. If you are using a normal brokerage platform, In pre-markets, you can only use limit orders. Your stops don't really work the same way as what they work in a regular market. So those are all the complexities of this particular setup. Now, if you want to improve your entry on EP, I would say the better way to do this is to research your EP and only enter EPs which are really, really um, significant. Like to me, ASPN was something which was like had a earnings which was like really good, or TMDX had a earnings. A lot of other stocks are going to go up on earnings, but they are just going to have 1 or 2 days of earnings, or if they are large stocks and if they have a good earnings, like say Apple has a good earnings by a large stocks definition, but I don't need to enter Apple at the open, or I don't need to even enter Apple today to make money from Apple if it is going to go up, because it's a slow moving stock. In that case, I use delayed entry, or delayed reaction kind of an entry. Example of that I can show you on a stock called Move, which is a large stock, right? And it's a huge stock. Capitalization is 121 billion. The earnings was good, but I didn't enter on the earnings day, and there was a shakeout. And after that, when it started going up on this day, I entered. Now, obviously, these are stocks which are not going to make big moves in that sense of the word. Similarly, if you see Google, now Google doesn't have like and had good earnings, but like if you bought it on the earnings, you got shaken out, and now this is the delayed reaction kind of an entry. So on a larger stock, delayed reaction or capitalization, if capitalization is about 20 billion, 30 billion, 40 billion, anything about 20 billion, typically act differently from stocks which have very low capitalization. If you see stocks like ASPN or TMDX, one of the reasons why they make explosive moves is ASPN's capitalization is only 1 billion. And if you look at TMDX capitalization is 3.8 billion. So these stocks which have a capitalization below 10 billion, you need to treat them differently from the stocks which are larger in capitalization. The larger in capitalization stocks move very slowly, or they don't. They tend to have pullbacks after their event and offer you a better entry as a delayed reaction entry. There is no one way to enter on any EP. You have to look at the totality of the picture. You have to look at, is the catalyst really so explosive? If I find a stock which has a catalyst which is likely to make 300, 400, 500% move, then I want to be in it, and then I will do an OPG order. In that case, I don't care, because I am like, and I am very convinced that this is going to work basically, right? The other thing is, if you are like and having problems and you are getting shaken out, is to drop the size. If you take a smaller size, you can use a wider stop. Most of the EP kind of trades are going to require you to have very wider stop, then in that case of 8 to 10%, and then you are not likely to get shaken out. But even a 10% stop can sometimes shake you out. So that's the complexities of trading EPs. So that's why EP is one of the strategies which I use, and it's not the only strategy. A delayed reaction EP is another thing which I am using nowadays, and besides that, I have better strategies now than EPs which I use, but it's one of the strategies which can be used during the earnings season to find these explosive moves like ASPN or TMDX and profit from it.